The NASDAQ leading the major averages lower today, down more than 1%. Amazon, one of the biggest losers, that's down 2%. Let's bring in John Spallanzani of the Miller family office. Welcome back.
Thanks, Scott.
All right, so I'm looking at our closing bell scoreboard right now. Cautious / bearish 2, bullish 1. Which side do you come down on? Are we going up 3 to 1? Or are we going to even it out here with you?
With the close?
Are you
or
bullish?
Just right
no,
now?
Not the close today.
Well, right now I think we're neutral, but I mean, you had a lot of people talking.
That's the non-neutral zone. Are you bullish? Or are you more positive on the market or not?
Yes, positive, always positive, because we're always optimistic. We always think the market goes up 70% of the times. There's no sense of fighting the market or the Fed. But right now,
be realistic.
But right now, yeah, right. We had an 8% correction not too long ago. We had a Taylor Swift moment where it was shaking everything off, right? We had a bad unemployment report. It shook that off. Everybody thought that was the end. It had bad PPI, shook that off. Had claims were still, pretty strong, shook that off. Mm-hmm. We had 2 bad auctions, shook that off. We have this geopolitical risk now, which is the future is now unknowable. But what it does, it ramps up the uncertainties for the Fed. So, as much as you want to say, or not you personally, but as much as the people want to say, higher for longer, all this stuff, the Fed is the lender of last resort. So God forbid this escalates. We have wars in Ukraine. We have a war in Ukraine, Russia, and now we have a war in the Middle East. How that is going to play out is high-level geopolitical chess.
In other words, the Fed put much talked about, but much now forgotten about is still here.
Still here.
That's the case you're making.
Well, also, the Fed foot is actually stronger when you go from 0 to 5%, 5.25%.
Oh, because the likelihood of something breaking that they need to fix?
Well,
like the regional banks.
Regional banks broke, but before that, remember, the market bottomed after the Bank of England LDI pension blow up, which really spiked rates over there. And then this is the first time in response to a crisis such as the regional bank failures that the Fed actually tightened afterwards. Mm-hmm. Past crises, the Fed actually eased. So they stuck to their guns, and then they got a little bit nervous the last few weeks. Okay. It seems like that was before the war, the invasion into Israel, obviously, right? And we see oil is going up. There's a flight to safety into bonds. The market's off because we don't know what's going to happen this weekend. And I think right now the Fed is kind of watching all these events pretty closely.
Let's go to one particular stock in which Mr. Miller of the Miller family office has become synonymous with, and that's Amazon.
Amazon, yep.
Still one of your largest positions.
And Bitcoin.
I know Bitcoin, but let's talk Amazon.
Bitcoin is one of the best performers, obviously, this year.
Okay, let's talk Amazon. Yeah. I think it's more relevant to more people and to the market, maybe.
Yes.
It's down 10% over the last month. What's up with the mega caps? Still feel good?
Yeah, I think we still feel good. Again, it's where you're going to put your money, right? So bonds had the biggest drawdown since the 1800s, right? Right now, the PE on the 10s is 21 times. The PE on the market, ex-FANG, is 15. The PE on high yield is 11. Cash is 5, but we don't know how long you're going to get 5 for. You can get 5 for the next 3 months. You might not get 5 for the next 3 years. Because when they ease, they don't ease in 25-point increments. In order to reestablish the curve, they're going to have to cut rates by 200 basis points at a minimum. And when the 10s are higher, when Fed funds are higher than the 10s, going back to 1970, that's the peak in rates.